Hello everyone. I'm here gonna give you some few recommendation on stock to consider buying. I think that's a good buy, and I'm doing a little format, different format than last time. For those of you who have watched my video before, last time I'm doing a dashboard kind of format, listing out all the columns with prices and things, and didn't really have the reasons why to buy, but verbatim shit. This time instead I'm doing a slide, which I'm happy to take feedback and comment and which format make better. But at the end of the day, these stock will be inserted to my dashboard. So for my tracking purposes, so like I promised periodically, I'm different than other analysts is that I will actually show the scorecard to you, periodically, so then to stamp up and you can kind of have an idea where things look like for my recommendation. That way, you can gain a trust and understanding of what is the best call to put into the stock price, buy or sell for what I recommended sometime. And the reason for that is everybody have a different price tolerance. So even if I have a price range here, doesn't mean that's what you need to buy. You could have buy a little bit higher. Taking this good example, current price 920 at the moment when I did a slide, and I say buy prime price prime range is 835 to 9. So 920 is above the range, but you're saying, hey, the target actually was $15. Well, good enough. So I still gonna buy it, right? That way, if the market continue rally like the way it is, it may continue pushing up the market for pretty much anything. Like you close your eyes now, throw your dice, and then you will hit it. Whatever the number of the stock, the name or symbol. Well, that's pretty much you will make money right now anyway. But again, because from a perspective of maybe 1 year, or long term kind of price target or range, gotta have some rationalization. Otherwise, well, pretty much you're gambling, right? If you don't know what the heck and just hear people saying saying this is really hit right now and go and buy the stock, well, the minute you're determined to doing it, you may already people make a first wave of money, and then for you to pick it up the stock and then you actually dip down, so you actually can lose a lot of money because of that, right? So I just want to make sure that everyone understanding expectations for those who listen to my video, know where I'm coming from. If you don't listen to my previous videos and follow me, then you will have a much better sake and knowing that how much I help people making money for those who have bought the stock that I recommended in the past. Well, you can very well argue it's luck because the market continue to rally and keep going up. For those who bought the offset, unfortunately, keep losing money. So I'm losing part of my money on betting on TECS and SDOW as an offset right now. But I also tell you slowly to decommission those positions so that you can cut the loss, and then in theory you should be gaining by the stock you hold. That is the whole purpose of hedging. So I don't go into those, otherwise the video will be way too long for you to get to the meat, which is what you want. So the first one is company name. I do it by order. So this is a number one pick for you to consider. First one is FLY symbol, Fire Leasing Limited. What do? Well, they are aircraft leasing investment company. So and they basically leasing aircraft, make it simple enough. So as of September 30, 2020, they have 86 aircraft and 7 engines in portfolio. Okay, why buy this stock, right? Yeah, if you have watching the market closely lately, you know that vaccine is coming on boarding. Three companies have vaccine effective rate over 70% and having FDA emergency use approval. So airline, cruise, restaurant stock, retail stock have already gone up over 20% lately. So, but this one hasn't really moved much, a little bit slower than starting to follow the flow and going up if you have paid attention last week of this stock. So, in the November timeline, this stock was only $6. Now it's $9. So just to give you a favor of 33% increase already, but because of the momentum, and the price, well, what is looked at that is before pandemic, which is March 17, the lowest point. So typically analysts will look at February timeline of this year, which is pre-pandemic. They were at $20. So and they have a really good business model. What I mean by that is, hey, if I'm leasing something to somebody I have a contract, what got to lose, right? I mean, so you really, because it's, you could be sitting out there right now, but technically you're taking a service fee. The way you look at the model is really the service fee to charging people to make some money off of it, right? What I like about this stock is, hey, earning per share is positive, right? So I actually don't like the stock that don't make money, right? If one is negative, unless you think there's a potential growth in the future. PE ratio is 2.21, which is not very unrealistic. Versus Amazon, I think is what 300. And some other stock that you can look at it, they're way above 20, 50s or over hundreds on the PE ratio. Of course, you have to compare it to the industry on this to see whether relatively good or not. But 2.2 is really, really relatively, pretty good. And the income statement has gone up year and over year since 2015. What does that mean? Well, they are managing it very well. They're doing the business in the right direction. They're making money. And then if you look at Yahoo Finance and you look at your own, if you have a brokerage account, you do go want to research it on your own, type in FLY, look at the analyst within your brokerage company that did the analysis and see what they say, right? So for this one, where they have what I researched at, the analyst price of this stock will be an average of $13. Will go to $13 in a year target. So currently price is $9.20 today. Buy price range again, I would say 8.30. Target price, I'm actually a little more optimistic than 13. So, but this target price, I typically take 2 years, not 1 year. So 2-year target price 15 to 18 is very reasonable. As if you see pre-pandemic was $20 in this stock. And again, the stock is kind of slowly picking up and moving up since November, and earning per share kind of slipped this year due to pandemic. But again, vaccine come into play, so we believe that things will getting better, and and this stock is also less expensive for those who can afford $50 or more stock, right? Because it's only at below $10 range, right? You may very well take 3 months but probably a year to reach $15. So because again, it takes time I think it's a little bit it depends on the news, whether you believe in that it could be more aggressive timeline. You can say actually at the end of the day faster. I mean, I would like to go back and look at the mask as an example where people were very panicked and pandemic. You couldn't even buy masks. Now what? Masks is everywhere. So vaccine, despite the mathematical calculations saying how long it will take for everybody to have vaccine, once they have the scalability, ability, and confidence, more likely for people who would take the vaccine, you'll be surprised maybe, first quarter next year, and, people already have the vaccine and take the shot and everything back to normal. Or could be this virus actually not as strong as what happened in the early of this year, or particularly in winter time where most experts very worry about the surge of the coronavirus case in US or actually Europe and so on as well. Hong Kong is also growing too in terms of the cases in China. So then I think you can, as an intelligent investor, you kind of know the story from up here is that vaccine coming up. This stock is related to airline. When you're bullish and people can fly, they are out of what they needed again, so they will go ahead and leasing with the contract. They need to leverage in that, right? Obviously the airline make money too, even if they borrow and leasing the airplane. And also this company actually balance sheet will get better and better because they all start collecting those deferred payments that some of the airline company were not able to pay because of the pandemic. Okay, like to move on to the next one. Next one is CRM, Salesforce. Salesforce, again, I think for those of you who listen to the news lately will know and heard about it, right? So it's an enterprise cloud computer solution with a focus on customer relationship management worldwide. They make money on storing data, monitor leads and progress, forecast opportunity, and gain insightful analytics and intelligent relationship intelligence, artificial intelligence. They also actually have doing some customer dispute tracking, more retail business, maybe using that. The company I worked for in the past, they actually use this company, and the company that my previous company dealing with, they also use Salesforce. So, and I know that the part of the very attractive piece of why getting me into this Salesforce is I see the company growing from $40 to now 200 plus, okay, few years. The company earnings is continued growth. the CEO is very ambitious to want to grow and have initiatives the way to drive in it. So part of the thing you may heard on the news lately is they are spending $27.7 billion buying Slack Technologies. I wouldn't get into it whether they are buying it, overpricing buying it or not, but definitely they see the value of this stock emerging, combining the integrations, and you will be able to better compete with their competitor Microsoft. And the other piece also is this, right? For those of you who work for other companies, also know that while the synergy across buying the mergers and acquisitions, it takes a couple of years to get integrated, and then you will definitely the top line sales will continue to grow. That is where the assurance are. So the earnings will continue to grow, right? I mean the revenue will continue to grow, and then they will through some integration, autonomous AI opportunity restructuring to actually gain efficiency. So that when that happens, then the stock actually will do better, right? So my price target is pretty conservative, to be honest. This is more for short-term technical to reach 260 by no time. If the market continue bullish, I expect that happen by end of year. Although some analysts actually saying the market will be tainted by 12% from now on till end of the year. So I don't know which is which, but regardless, this stock is a very good stock, very attractive stock. In 2 years target, to be honest, I think this stock will hit $300 as long as the roadmap that they set it up on the initiatives and they continue beating the earnings. So what this stock have is quarter to quarters, they have proven themselves that they actually did beat earnings big time, and we're surprising the analysts. Equity has grown 6 times since 2016. PET ratio is 10.2x, which is not bad compared to the industry, only at 2x. And again, the other selling point from my end to you is, well, there's some smarter people which have the dashboard and KPI criteria, which I don't go into detail. They determine which stock should go to Dow Industrial Average Index. When Apple was split in April, they knew that the calculation of weighted average was be skewed if they don't get some other stock to replace in them. So what it is Salesforce and Honeywell made it in that route of evaluation. The stock actually at the time before the announcement was $210 level and shot up to $272. While during that time, during the pandemic, though, the Salesforce earnings actually hit what they have promised and exceed the expectations. So then, the price of 272 really kind of very reasonable from that perspective as well. So they actually have a very strong Salesforce team, although, well, you also hear announcement that in last quarter they did saying they are cutting people in Dallas office for supporting Salesforce, well, overhead costs, right? So that also another assurance that with the CEO, monitoring the revenue top sales strategy wise, and also how to control costs, this company will get to where it wants to be. I really think this stock right now is the level about. Oh, the other reason why I put this number 2 and that one number 1 is the price today with the value of the market, the Dow over 30,000 and Nasdaq was record high, is still at that price range that I would recommend buying. The other one, the reason the ranking is a little lower because they are not at the price that I would recommend buying per house, so you cannot quite get in it today on Monday if you wanted to. The third one is Innovating Industrial Property IIPR. This one is a corporation in Maryland that had unique business model to grow the cannabis for medical use. Hopefully I say that word right. I don't do marijuana, so I don't know how to pronounce it. Cannabis has been a very hot stock recently. I mean, if you hear it, like for example, ACB, have an absolute volatility, which is crazy. They gone up as $40 this year, then they reverse split. Things were not going well, and then they were shot up $11 today from $5. So just to give you a perspective of volatility of that type of stock, this stock is a little bigger. It's trading around 100 plus. So then actually 150 bucks right now today, and so it was actually going up from $140 previous week if you look at it. So what it is, the strength is over 9-month period, the balance sheet has doubled. Like I said, it's good business model, EPS growth and revenue growth are much stronger than industry. And then some people, analysts will use employee as productivity index to see how efficient the company really is. So they're taking the revenue divided by number of employee, and it's actually higher than the industry as well. Like I said, if you go to Yahoo Finance and research a little bit, the 7 analyst prices this stock at an average of $163 as a target. The high end was is about $182. So I see this stock power will hit back to $165, which is actually 165 will peak at the Denver prices as well. So again, this stock also operated and manages now 63 properties in 16 states with 126.1 million in annualized revenue. The debt equity ratio also looks good with a pretty good growth rate. So that's why I recommend this stock. Actually, like I said, I did do some analysis, due diligence, take a look at it, and it's subject to you to determine when it's a good price to buy, since my price range is a little bit wider on this one. But overall, in a year or two target, this will go over $150, 165, which gives you 10% return, right? If you do the math. The KPI really look pretty good on in terms of the investment. So this stock, I think is a good buy, and perhaps maybe next week if drop a couple of dollars will be good for you to consider buying them. Next one is my favorite, McDonald's. I'm so sure, I don't need to go into what McDonald's does. Everybody knows that, right? So this is a very good. When I was a kid, I loved McDonald's. I mean, I don't know what happened to that Ronald McDonald, the guy, which I think you got removed it in some of the McDonald's because it looks a little bit scary. And I know my niece, it was funny, my niece used to not like McDonald at all. Every time she saw the Ronald, she cried. She gets scary. I mean, I look at her smile. The Ryan smile was pretty okay, but I don't know. Some children just don't like it. And they all worldwide operation, as you know, and operated 38,695 restaurants. And a lot of income that what they make really out of it is real estate as well. Just bear that in mind. So again, I know that this year they have launched it to making a more healthy breakfast menu and lunch, and a couple of items on lunch as well. They are showing you the calories each product have, so then you can stay more aware of being healthy. As healthy, I mean, most people really understand fast food is not healthy, so the two cannot come together. So at least they're minimizing to make sure people become overweight, right? And then you can be more aware of that. And my rib also come back, so it was pretty good. So again, they are very good initiatives, are very mindful about the product. In Hong Kong, they actually, on China, they have some more customized menu that you actually can find in the US, and I don't know why. And also breakfast used to be not all day, and I think they getting some feedback from customers, so they made changes on that as well. So I know there's a lot of continuous improvement, and also they start to automate it now with vending machines, so you can go and buy it on your own. In China, I mean, you're using the basically PayPal type of deal, and like more like Apple Pay type. You do it, and then you could just scan it yourself and pay, and it's all automated. So it's really awesome features. Although they still have the kind of people supporting, definitely supporting inside. They still need people to cooking the food. They are not getting to the point doing robot yet, right? And in Japan, I think when you further down, they actually have a machine, right? And you pick and choose, and then they will just inside people cooking, and then slide down on that, and you can grab it yourself. Well, I think there's only a couple places having, not the whole Japan. Take it back. And then the CEO also have a driver that they want to invest 2.3 billion next year for future growth. So what does that mean? Typically, it's about 1.2 billion dollars they want to invest for the company. So that, again, the return on investment, if you look at the KPI matrix, is actually better than industry on that as well. So that tells you, hey, I have a roadmap, I have a mindset, I put things into perspective, and I put money into it. I know that I will get a return, so this company will continue to grow, not staying there. Some of the company having challenge and problem of, if you look at the share price, they're not moving because they have been stuck. So what it means is they have no new innovative product and no innovative ways to sell things to you to increase revenue, but not McDonald's. Again, and its price start an average of $242 target. I would tell you those in pre-pandemic, it was $200 on McDonald. And on March, when you got a hit and down a lot, it was hitting back to $170-ish. I actually bought McDonald 170 some dollars, and then 3 months, I don't remember, recall exactly, maybe 2 months, within 2 months, you grow to $205 with a good earnings. So I sold my stock. So I actually want to buy back now with the continued growth and with this type of really good plan. So that's why my price ranges at the low end of 198, which is still below $200 to around 205. So you will be lucky enough. Today is 211, which is about only 3% decline. You will get it. Then this is a good stock to hold, and I'm pretty sure that in a year or two, when McDonald's continues to grow, they will probably hit back $240 or 260 from that perspective. As long as the normal shutdown, the revenue will be growing the way they anticipated and communicated, which of course is one of the uncertainty, right? I'm not a fortune teller, so I don't know the future, right? And then the next one is HYLN. I know this has been a very hot topic with electric vehicle have been going up really wildly a lot in last month in November. This stock also have moved up a little bit, but kind of a little bit disappointing because this stock actually was driving from $52 and actually rolling back to $17 at one point. But then the attraction of electronic vehicle momentum drove the stock to $25 level. Many people believe that next year when Biden, President Biden, which will take the office, blue gas will be the future because he want to, make green energy and everything environmentally friendly. So then this stock will be, really after the electric vehicle, this will be next. But his business is more focused on truck anyway, so not necessarily for consumer, but more for commercial transportation. He also have management and working deals with China as well on this. So one good thing is, yes, they're losing money at this point, but they all actually getting better. And what is a positive aspect of this is the balance sheet has grown in multiples. There's plenty of cash on hand right now that they can do what they need. And then the CEO is a very brilliant person, although he may be a little bit young. So he probably need to find a strong leadership team to support his initiatives, sales team to work on negotiating and getting contracts from the other truck companies. And most importantly, I think from this whole landscape where you really attract me to tell you to buy HYLN is you have to increase and persuade other institutional investors to increase the stake of owning this company. So right now currently the stake of this company is 15.97%. So if there are more people like Warren Buffett, Warren Buffett bought BYD earlier, so the stock, electric vehicle, this stock was shut up. So if Warren Buffett or somebody else, Bill Gates, doesn't matter, were well into thinking this stock is a future, supporting blue gas, then putting more money into this stock, whatever the price at they will buy at, the stock will go up. And I'm very optimistic about this stock that really I bought some at $52 as well. So I believe right now $18 is a great buy. So buy pricing range of 15 to 92. The lowest price of this stock is $9, just to put things in perspective. And the target price, I think this stock will be very easy and very well to hit back to $30 or $40 range next year. And I would say this, right? If next year they have an outlook, they definitely have an outlook for next year, probably first couple quarter also losing money. But if they beat the expectations, they're very well managing the company, and they really get the people and strong leadership to drive the initiatives. I mean, you will get there, right? I am actually happy to join his team as finance advisor to drive operational excellence and growth. Hey, if you hear that, you want to hire me, great. I see a bright future next year when the outlook continue to improve and beat expectations. So I think this stock is good to own right now at $18. It's a good price to go in. Although you could dip a little bit, but today is pretty good, and because it fluctuates between $18 to $21 just this weekend. I think few even last week was like at $24, 23 $24 range. Due to the time constraint, I'm gonna briefly just touch base on few more, just so that you know that these are other stock I talk about or I'm looking into it. XPEV. For those who bought XPEV, chances are you take my advice or sold XPEV. So you make a lot of good money. Some people actually double what they bought, which is very exceptional, extremely happy. I would say this: the resistance point will be at around $46 to $48. The stock currently today, well, it fluctuates pretty bad again too. So I think it's within the range this week at $51 to $56, if I'm not mistaken. So the few more, there may be another 10% to go down, then you can consider buying them back, especially for those who make money off of XPEV with the momentum they're driving back, in November. So this is the price where I should pay attention to. Then the second one I also recommended BLNK on my list. I would say if you can and you ever come back down to $14, then you buy. This stock was going up from $8, hit it up to $14.50-ish, which I bought because the momentum keep going up. Then you hit to a high as $33, and now you're coming back at current price like 22. So there's still a little more room to push down, right? Maybe another 15-20% to what I talk about the price range. It's your judgment call when you're gonna think going in. But with Biden administration, same story, green energy. Well, he had a vision saying that he need to build all the charging station, right? Otherwise, what's the point for buying an electric vehicle when you cannot charge and you can be stuck in the middle of urban area? So he want to build that in around the highway. Exactly how it's done, I don't know. I'm not an engineer, but this is where one of the stop BLNK is the potential that they will build a charging station. I think probably started with California, my guess of where he started to build those. Maybe in Washington too, who knows? And then this stock, if they really lock down the contract, you will have a big potential to grow. Then the next one is JVA. I love drinking coffee, so you can look into it. Again, simple is JVA. This stock is pretty cheap, $4, and I think it has potential to grow. I'm not going to go into that. And then the next one, which is another green energy stock, FCEL. The stock currently is really high. It was from $9.50 drop a ton, now currently $7. I will recommend it at $4.50 to $5. You may consider this stock. But I'm looking at it on a technical perspective rather than the fundamental perspective, bear that in mind. And when it is time to buy, I probably will let you guys know in one of these videos that I do every morning. And then next one will be PLTR. This one is a defense, military defense application software AI with some AI company. They have talked for years that U.S. government have been heavily relying on this company with national security sensitivity right now. People used to have a very high expectation of this stock when you launch to IPO, but at the beginning when IPO launched, actually for those who bought it, which like me losing money, I sold them after within the first month nothing happened. But this stock have suddenly have with momentum again because of certain late national security sensitivity. You gone down to $33, I think. And then now you drop back down, right? So I will recommending you will buy this stock or look into it $20 or lower, perhaps $15 on a safe way. That way the IPO price is only $11 or $10. I mean, you're pretty close to it, and a lot of time next year when things were great and government have another contract with them, want to expand them, to study or wherever and AI, then you have a really good chance on that. And last one is CLNE symbol. I wouldn't buy this one if not lower than $4.50. It's a clean energy company. They already have contracts for commercial fleet and basically again it's another company that worth looking into with Biden vision of green energy country that America going to be. All right, I hope you like what I just said. Please make sure you subscribe if not done so and give me a like. And I open to feedback. And I hope everybody will make money after buying this stock. May not be way away. One thing very important, I must be do a disclaimer here and very clear to you guys, investor. If you decide to buy my stock and tomorrow stock hammer or macroeconomic factor may as well, right now Wally but pull back, don't lose faith, right? And don't blame me, most importantly, because I'm telling you to stop for my analysis in its future. It doesn't mean today buy, tomorrow you get a return, right? If it is, I'm rich already, you know. So it will be eventually. I am more look forward to if end of year you come to that price, you may consider selling them. Or again, the video will tell you that. Otherwise, next year will be what I'm looking at, particular of the stock sharing with you, very specific why and how you will come back from where they are at, whether they're making money or not, right? In this case, HYLN is not. Then that helps you to drive the story and decision. So if you are particularly looking at short-term return, these stock may not necessary for you at the moment, because in XPEV example, I did not anticipate that the stock was rallying or in sudden that quick, in such a quick motion that people who bought it at the time start to move or told them to buy, making like 200% return in a week, right? That is very, very odd in the stock market, right? And on average, not typically of about 12 to 15% a year in terms of index. And I think this year the index will look really strange that the return will be maybe 20 plus percent, which means your portfolio, whatever you invested on, you should get 20 plus percent. And with the video I told you about inflation, which on top and devaluation of US dollars, you should price in anticipate another 10% because of that just from the purchasing power perspective in parallel. So that means you're looking at 35% return in this year to claim yourself to be a successful investor. Again, if you like my video, please give me a like and open for feedback. Thank you very much. Appreciate your time.